it is an assessment of the reporting practices of the companies, which is done through their annual reports and other publicly available information. A research team from Climate Finance Pakistan will be talking in more detail about the sections and the different indicators which have been assessed in this report. But in doing so, the track assessment, it aims to build on the idea that the public reporting demonstrates a company's commitment to ethical corporate governance, making companies more accountable for any shortcomings. The improved practices are an important building block in improving a country's overall business integrity environment. At the same time, I think it is also important to acknowledge that Pakistan has made important strides for corporate governance in the country. As we all know that the Corporate Governance Code that was first introduced in early 2000s by the Security and Exchange Commission of Pakistan was driven by this need to improve transparency, accountability, as well as the investors' confidence in the wake of global corporate scandals of that time. And over the years, I think we've also seen how the corporate governance has evolved in line with international best practices for both listed and non-listed companies, as well as to encourage the voluntary compliance and enhance the overall governance standards across various sectors. In recent times, again, I think we've also seen how the ESG disclosure guidelines, anti-harassment policies, the enactment of the board's responsibilities on sustainability, the disability, equity, and inclusion have been introduced to further strengthen our corporate governance regime in Pakistan. However, the challenges remain. They range from limited disclosures to understanding the benefits of corporate governance. And at Transparency International Pakistan, under our business integrity program, we are working to create and promote this awareness around the adoption of best practices, both mandatory and the voluntary, and how the companies can implement it effectively through capacity building, trainings, or providing a platform to exchange opinions and knowledge among the companies, regulatory bodies, as well as different stakeholders. This report has also made key recommendations for both the companies and regulatory bodies, which I think due to the paucity of the time, I will not be going through. But we really hope that today's this a small discussion that we are having in a different format will provide a platform for a larger exchange of ideas and a candid discussion on how corporate governance and disclosures can be strengthened in Pakistan to build an integrity-driven business environment in Pakistan. So I think I'll stop here, but thank you once again for taking out the time to join us online, as well as for your confirmations for in-person participation. And we sincerely regret any inconvenience caused by the change, but sometimes the things are there which are not, I think, in all of our hands. But we hope that we'll continue this engagement. Thank you very much.
Thank you, Kashif Saab, for that insightful introduction and for your leadership in driving this important work forward. Next, it's our honor to hear from Mr. Salman Amin, Member Competition Commission of Pakistan. And Mr. Amin will be sharing his perspective on the role of transparency in strengthening corporate governance and fair market practices. Salman Saab, are you with us?
I can see Salman Saab is online, so just give me a minute.
जी सलमान साहब ऑनलाइन आ चुके हैं सलमान साहब I would like to request you for your perspective on the role of transparency in strengthening corporate governance and the fair market practices. The floor is yours, Salman Saab.
Ji, thank you, Ji. Assalamu alaikum. Sorry, we are having these sort of issues because we have to manage it in a different mode, the one which we had earlier planned out. So, firstly, obviously, we all like to condemn this attack on Pakistani soil, that's attack on our sovereignty. We don't want this escalation of, tension between the two neighboring countries. And we stand by with our forces, and obviously would not like that these things escalate to a level where the entire economy and everything, every human being suffers in this region of the world. Moving along, firstly, thanks for inviting CCP also to this important event. And I must congratulate Transparency International Pakistan for their consistent and persistent effort in promoting transparency and accountability. There are many areas which are very core to transparency, international mandate, and as per our Competition Act of 2010. And the reason is that we also, as per our act, place at very high pedestal, fostering open and fair competition in all spheres of the economy. Just for the knowledge of the participants, we have got main four pillars of our Competition Act. One pertains to prohibited agreements, checking the cartel behavior, looking into mergers, and then in certain cases we do provide exemption as well, provided that the exemption benefits outweigh any adverse impact. So with this four pillars, when we see into the publication for which we have gathered today, I think there are many core aspects and we would like to add our perspective to it. Overall score of 72.3 is something which we can say is on the right path, but not ideally what we would have liked. But nevertheless, we are moving into this direction, and seven parameters. They are all, very comprehensive when we talk about anti-corruption, organizational transparency, financial reporting, non-discrimination, procurement, human rights, and other reporting aspects. When I'm talking about when how the regulators like CCPC, we have a different perspective to the same parameters. Obviously, transparency is there, and all these six are core to it. But for example, when it comes to financial reporting, it has given like 94.35 transparency score. But when we are looking into certain cartel behaviors, uh, we were not very satisfied with the financial reporting approaches being adopted. Yes, what SECP law says, what other reporting requirements say they have to follow IFRS, International Financial Reporting Standard. Fair enough. But when we go into the cartel behavior, for example, I can give you two, three example. One is of the sugar sector. When we were looking into this, we came to know that the cost of the raw material, the sugar cane, what price being was being reported and what was being actually given to the farmers, growers, that was, there was a difference in between. So again, as per IFRS, they had quoted the rate, or they have included in their financial statement what was the notified support price from the government. Fair enough. But when it comes to the actual cost, we came to know that the growers were given two options, that if they want immediate payment of their sugarcane, they can get a 20% deduction and get straight away a cash payment. Or if they want a formal payment, then they have to align for it and then get the government notified rates. When it comes to the financial reporting, the reports were giving what was the notified government rate. So linking financial reporting and actual costing, our perspective is little different. Same when this was about the cartel when we were looking into it. Another, when we were talking about, because we have to give the approvals of merger and acquisitions, Over there, recently you might be knowing that a major merger is under process. We are processing the application in telecom sector. While we are looking into the transaction, we have to see what has been the case at the arm's length transaction. Whether this report by TIP has mentioned about how the subsidiary are being supported or not. When we are looking into it, we have to see that one is because it's all in public domain. We conducted the public hearing to certain extent. I can share the information at this forum that when we were conducting that conducting the public hearings for that merger, application, the stakeholders were saying that the market is being concentrated by this merger acquisition, and then the company which is acquiring the target company, it is going to lessen the competition because there are hidden transactional costs, there are hidden cross subsidies being given. For example, if an entity in this relevant market is have to acquire financial facilities or loaning from the market, they have to seek the commercial rates. But if a subsidiary is being provided, supported by the parent company at a lower rate, which is not at arm's length transaction, and that is again not being adequately disclosed in the financial statement, because IFRS disclosure simply required that what how sort of related party transaction has been carried out. But when we see the anti-competitive aspects of whether it's going to distort the fair competition in the market, the arm's length transaction disclosure is not being made the way we would have liked or the way the stakeholders would have liked. IFRS is very good, fair enough, they are very good, but they are for investors. That these are all these 69 companies are all listed, so these were very useful and pertinent for the investors. But are they relevant for all the stakeholders? Are they relevant for the competitors, the regulators, the sector regulators? Is this information sufficient there or not? Maybe we need to have a look again or at this, because we appreciate the 94.35% of transparency score, but what we are practically seeing as a regulator, we have a different perspective. Moving along, the other parameter when we talk about the procurement related, that is something when we have been to look to, and we also are really concerned about this score of 59%. This should have been in a higher range. And the reason being that we have seen cartels in most of these procurement, and bid rigging is norm in certain sectors. And this is what I'm saying is based on actual inquiries which we have been able to do. For example, we had many cases where these cables cost for the distribution companies, the transformer costs, these small and large size 66 kV and 132 kV transformers which were being procured by the discos. There was obvious bid rigging going on. Then we have recently conducted inquiries for NHA, where the bidders had formed a cartel, and they were into bid rigging, or even they were distributing the north and south region, or this link road link and that highway road link to be bidded by one party, and another bid, the second party was getting the bid, getting the contract award, and then subcontracting the other competitors. So bid rigging is something which we have actually very closely looking into it, and we already know that the hit it is already causing to the economy. I think IMF is very closely working on it. Ministry of Finance has recently issued a report that the PSCs are causing around like over 400 500 billion rupees loss per annum. So while we are working on increasing on our tax to GDP ratio, we have to see what these losses as a percentage of GDP is causing just because of bid tricking and procurement related issues. So this is the area which we fully support Transparency International, and we fully endorse the finding of this report. Anti-corruption program, that was we all know it's a concern, but having an actual score of 47.28, this is something which we see it very anti-competitive. Because when you talk about the anti-corruption program, we are not sector-specific regulator. We deal with every sort of regulator, and it includes pharma, telecom, you name any sectors, any spheres of the economy, and we are dealing with it. And while these 69 companies, these include public sector enterprises and other companies as well. So when we look into the score of even less than 50%, that they don't have anti-corruption program, but when we actually see what's going on in the practical field, this index is a real concern for us. And we have got, three, four anti organizations which are doing anti-competitive, anti-corruption, activities they have to conduct as per their mandate. With their presence, you could see anti-corrupt, these corruption even in real estate, in Ponzi schemes, asking and, looking for returns, offering very high return, micro credits, even nano credits. We call them loan sharks as per our regulatory term. They are the loan sharks, and this corruption is not at the corporate level. This is causing the harm, the poorest of the poor, where at nano level they are seeking loan from 15 to 25,000, and that is also in the shape of a corruption. So this index is a big concern, and we would like to work with all stakeholders, including TIP, how to improve this index. Talking specific about this, corporate responsibilities and human rights aspects. Corporate responsibility in certain cases is being confused with advertisement and branding. We have seen that, many entities which are doing their CSR function under a regulatory or legal requirement. For example, oil and gas companies, when they sign a petroleum concession agreement, it is mandated for them that they have to look into the CSR activities of that production area. They might not be into the branding, but when we come to other let's say FMCGs and all these things, when they are doing it corporate responsibility, they are confusing it with the branding, or they are being wise enough not to confuse with the corporate CSR and branding. They are having a sort of a in between the two. So we have to distinguish very clearly between what is a mandatory requirement and what is their obvious voluntary requirement when they are doing the CSR activities, and that should be aligned with the overall economic agenda of the country. For example, if they are doing any health and education schemes as part of their CSR activities, it should be linked with the national education policy, that what sort of enrollment we want, what sort of gender inclusive we want, female these female children education, how we are going to target it. So that index has to further made more specific and segregated from the branding. So this was also our concern. Talking specific about the top performers, just like Lucky Core Industries, good to see that score of 94.3%. And as a regulator, it was very good to see because they have applied exemptions in certain cases. and they are into pharma business and as well, and they are into life-saving drugs as well. So for their distribution across the country, they wanted certain exemptions that they don't want to appoint distributors under a competitive process. So after due process, we gave them exemption with obviously with certain conditions. We engaged the sector regulator DRAP as well. But it is good to see entities like this which are scoring in 90s and linking it with the how we are in a more comfortable zone when we see this index from TIP from their research base. It gives more comfort that these are the entities which we should facilitate, provided they are complying all these 7 parameters covered in this report. The other extreme, poor performer, Rafan Maze, it is it has got high weightage when it comes to market capitalization. We know it's a high dividend paying company, but their index, well, it was very unfortunate to see 35.5%, then high noon laboratories like 30.5%. That is a concern that these are listed companies. These are into business with public money. Obviously, they are trading with the public money. So it doesn't, match that on one side you are so cash flow rich that you are making high dividends, you are paying high dividends to the shareholder. But when it comes to this 7 parameter index, you are way beyond the indicators. So here I would like that TPI would have to work with the SCCP as well as Pakistan Stock Exchange, that how to improve this. And this is something which we have to highlight because it eventually impacts the overall competition index in the country as well as the transparency or corruption index in the country. I'm not comfortable with the why ParkGen has refused not to be part of it. It's a listed company. It's an IPP. It is providing electricity to the national grid, and every consumer, you, me, and everyone, we are consuming electricity. And why they have not been part of it, a little concern for it. Maybe those who got on the radar, we might be talking about them, but it would be unfair if I don't talk about such companies which refuse to be part of this research and publication from TIP. So that's a concern from CCP as a regulator. Few aspects that we can share, that where we as CCP were not comfortable, because we are following more or less the same principle, but under our mandate and law, we can very proudly say that in certain cases, after due diligence, after completing all the regulatory proceeding, we have made certain refusals as well to the exemption. For example, PSO wanted to supply fuel to a certain number of IPPs on sole source basis. When we gave them the opportunity, we gave the IPPs as well a very good opportunity to justify their case. They could not justify the case, and we had certain transparency and competition issues in this. We simply refused their exemption. So that is the area which should also be accounted for on it. Lastly, moving along to the recommendation part. Um, well, we support that this anti-corruption policy, because we have to start where the index is, very low. So on that part, I think we have to support with all these listed companies that they should have very clear anti-corruption policies, and those companies which are already public sector enterprises, they are already required to have certain measures in place. And regardless of this, again, accounting and internal controls very clearly are mentioned in under the corporate laws, that every listed company needs to have strong accounting and internal controls. I've already, number 2 point, I've already mentioned about the arm's length transaction. We are not very clear when we are processing the applications for merger and acquisition. The arm's length transaction are not very clear to us. We want more clarity on this. Third point, whistleblower mechanism has been touched upon. Just to share with the participants, that we have gave the incentive, we have advertised in the print media as well, that if we are given as any whistleblower is highlighting any cartel behavior in any sector, we have the option of cash award of 2 million to that entity or individual whosoever highlighted. And if during the inquiry any entity complies or goes for voluntary compliance when it comes to any cartel or non-transparency issues, we have the leniency clause as well. The important point which report was mentioning was the two-side communication, two-way communication with the whistleblower. That is the point we support, that unless and until these are supported, and the once you have received it and when you don't get back to the whistleblower, then we are not supporting it. So we support that dimension of whistleblower policies as well, because whistleblower policies are everywhere, but not being practically implemented because it's not two-way communication. On the disclosures, I've already covered that IFRS, okay, good for investors, but not for all stakeholders. We need to have third-party verifications and all these things to ensure that the disclosures on financial statements are good. We won't disagree with the 94% score given in this report, but we would like to say that the other dimension when it comes to the financial reporting is covered. And lastly, on procurements, obviously all companies, listed companies and public, these particularly public sector enterprises, they have to have very clear procurement procedures in this regard. Here, I would like to clarify that, PPRA is a basic document, and every entity, the public sector enterprises which have to follow them, they can have more stringent procurement manual, not consistent to PPRA rules. PPRA rules are the basic rules which have to be complied. Where, for example, I mentioned about two, three sectors, particularly DISCOs, NHA, and these transportation agreements. There, the entities can have further stringent and sector-specific procurement mechanism in place, consistent with PPRA. And if there are, any issues, then those matters should be reported to the relevant regulator, including CCP, because bid tricking is prohibited under Section 3 of Competition Act, and we are very active on it. We have got market intelligence units known as MOU, which is clearly looking into all the major procurements which are underway. And part of it is how the bidding documents are made. Unfortunately, the bidding documents are made specific to one bidder or one or two bidders. That is the area where TIP has to work along with the other stakeholder. We are already working with, we have recently signed MOU with PPRA. We would like to have a similar arrangement with TIP as well, if they want to have our input on it, and we would be able to provide our expertise and support and provide all sort of assistance, just to ensure that the bidding documents are as open as it could be. So summarizing it, we really appreciate this publication. We really support this consistent and persistent approach of TIPs, and particularly giving exact numbers, give a real, mirror reflection where the various these 69 companies are, and why not, improve from 69 to including the other listed companies, and even those which are not listed but are of significant importance to the country. Those companies should be
Thank you, Mr. Ami, for the thoughtful and forward-looking keynote and highlighting the importance of transparency, corporate responsibility, and ethical leadership in today's business environment. Next, we will hear from the lead consultant behind this assessment. I would like to welcome Mr. Dawat Dawar Hamid Bhatt, who will walk us through the key trends and takeaways from this report. Over to you, Dawar, and you will have 10 minutes to speak. Thank you.
Hello, am I audible?
Yes, Dawar.
Thank you very much. Good to join. Unfortunate conditions forced us to do this online. Otherwise, I know the transparency team had planned a very detailed session in regards to our presentation as well, and the work that went into this. So I'll take less time so the participants can quickly go through our findings and the way this worked. Essentially, next slide, please. We developed this methodology looking at the international publications, and of course, corporate transparency reporting is something that has happened in other parts of the world as well. So it wasn't like this is the first time any entity is doing it, and we found a lot of learnings from our secondary desk review that how other countries and in the context of especially South Asia, but also Asia in general, look at these issues. So, starting off with our approach and methodology, um, is should I share the Saad, if you can move to the next slide, please? Or alternatively, I think slides are moving. Let me see if I can. Great. So the reason, as I'm mentioning that, if you look at the overall business dynamics currently, given how a lot of large entities that are partners to our state and as well as the business environment, including most business associations, including our own relationships with the IFC, World Bank, other large entities. One of the things that has been emphasized over the last 4 or 5 years with increasing frequency is corporate governance. Of course, there is large pressures due to our international global linkages. Pakistan's economy has become much more linked in the last 20 years, and that is why the regulatory pressure has also increased to match the partnerships around the world. And then, of course, we also see that the regulator, particularly SCCP, has been working quite extensively to reduce risks, especially in terms of the risk management of financial materials and companies' own information. And of course, we do see that the increasing adoption of ESG principles, it's also happening in Pakistan. But if you look at the GCC and other South Asian ASEAN countries, it's already quite well advanced. So it's very much needed that transparency and disclosure has become a routine part in Pakistani business environment as well. Next slide, please. So as many of you might have already gone through the report that is also included, the track report itself also figures into the Corruption Perception Index. That is the flagship publication of Transparency International. Of course, there's a lot of other documents that go into it, rule of law, governance and corruption does feature into this score. And of course, Pakistan ranks on the lower side of the Corruption Perception Index. And having this sort of data will allow for Pakistan to improve because in many cases, data sets are not updated or do not exist as we've been able to develop this. At the same time, we actively want to encourage that the significance of this report, of course, is not to point fingers at any particular entity. It's, of course, to say that these are the sort of scores or metrics that you need to look into. to improve your transparency, reduce corruption, because it will eventually lead to increased investor confidence, increased investments, and from the government's perspective, it will also increase regulatory compliance and that they're able to get to businesses. Next slide, please. With the report, of course, as I'm mentioning, it's not to point fingers to any companies. That's why we actually took a very representative sample. We did not pick any company. What we did was that we looked into the listed companies, all of them in Pakistan, and saw how it was broken down into sectors. From there, we saw that the focus should be on, key things that both align with the local laws, particularly, of course, the Code of Corporate Governance, but additional laws that have been laws or at least policies that have been put in place. Some of them relate to agenda and CSR. Some of them relate to labor policies and human rights. And of course, one of the key things was government procurement as well. The global benchmarking has been done, of course, as I mentioned, that we compared the reporting processes in South Asian countries and then saw international frameworks can also be that SCCP's own corporate governance, international benchmarks as well. So it wasn't something out of the ordinary. SCCP's own corporate governance is quite advanced in terms of even regional laws. Next slide, please. So the selection criteria here was that we picked 70 total entities from 26 sector groups, and the idea was that companies which have a smaller market cap will not be selected because from the assumption that smaller companies usually have lower resources to comply. So essentially, the companies that have been selected are most of them have the resources or scale to actually be able to do high level compliance as well. For market cap that was observed, we put in a close off ending period of 25th September. We did not take the changes afterwards. And also, this is closely matching the 90-day period that SCCP gives for publication of annual report. So for 2024, but many of them were 2023 reports as well. At the same time, the recent changes in Code of Corporate Governance were not used to score any of the companies. So we still used the non-amended version. This SCCP Code of Corporate Governance did go through some amendments post 2023 as well. In the scoring criteria, it's quite simple. We give points on the basis of the quality of disclosure and the fullness of disclosure. This is again terminology that IFC uses, that completeness and clear disclosures have certain language, and then partial or somewhat disclosures that can be misconstrued can be considered as a no disclosure as well. So for clear answers, with a score of 1 was given, partial 0.5, and in case of no document or disclosure available, a score of 0 was given. Questions that were not relevant to a particular company or a particular sector were labeled not applicable, and in the final average, they were not included. So companies did not lose any points based on this. These are the examples. If you look at the text, that what very clear disclosure looks like. For example, on the in regards to a non-discrimination, it was very clear when a company would say that nor will any discrimination on the basis of religion, caste, or gender be allowed. Very clear cut and to the point, and then of course we show zero tolerance to kind of corrupt. A partial disclosure would be, a language that is not leading to a very clear disclosure. It's similar, like as mentioned here, employees are required to inform their superior of any activity and should politely decline to accept the same. So in this case, we believe that very clear could be that, employees are asked to decline at all and have to disclose very clearly to their superiors or the company's own administration and HR. Next slide, please. The key sections in this assessment, as I think Salman Saab was also going through it section by section, so everyone already knows, is anti-corruption and organizational transparency, financial reporting practices, gender and non-discrimination policies, CSR, which is based on Pakistan's own international and local policies, and then procurement data if it was disclosed at all. Next slide, please. And this again, as I mentioned, that we use 2024, 2023 annual reports from company websites, and we did provide companies a large period for feedback. Initially, it was 15 days. We extended it to 23rd January again, making it 23 days. And then, of course, some companies still wanted to have some changes included. So we did give chances of any replies coming in till 31st January to be included. So any documents that were not publicly available, some of them eventually into this. Next slide, please. Please move. Keep on moving. Uh, the scores are here. Of course, this is also in the report. The overall scores were 7.23 out of 10. Companies that were significant transparency was 26, moderate 30. So in case a majority of the data we had showed that more than 50% did fall in the significant and moderately transparent category. Partial transparency and slight transparency were lower. And as you can see, no, keep on moving. I think this is fine. As you will see from the detailed results, which are also in the report, companies in anti-corruption were sort of below the 50% threshold. The average was 47.28. Um, Companies declared compliance with the laws, but about 50 had explicit anti-corruption statements. The rest did not. At the same time,
Now you're muted.
Oh. So the board anti-corruption policies where endorsement was missing for more than half of them, and about half of them again had policies for gift and reporting of those gifts. Again, whistleblowing policies existed for about 41 of them. And detailed breakdown, of course, for companies is in the reports annex. We won't go into the data scores for the companies within this presentation, but they're available for anyone to review. Next slide, please. Yeah, so I think this was overall the performance here was uh, 0.54. Again, most of this was based on the Code of Corporate Governance, but it applies with most of international benchmarks. Then for domestic financial reporting, all companies, of course, disclose their revenue and sales and income as well. And about half of them also disclosed contributions to CSR, which is overall average figure, but could be improved as well. The gender and social discrimination, again, many of the companies have internal policies. So more than 60%, 68.84% did have the reflect this transparency. State companies, nearly 84% are committed to protecting women and having gender safeguards. And then promotion policy was also disclosed internally as well, but only 27 companies managed to have a gender inclusive promotion policy. Next slide, please. Procurement contracts, we saw that many companies were not disclosing it. Only two companies are fully transparent. Companies including in the infrastructure, cement sector, auto, fertilizer, oil and gas, they were indirectly reporting it. And if a subsidiary was involved, in many cases that reporting was not being done. So this needs significant improvement. Procurement related was not completely transparent. Next slide, please. Yes, this was based on the recent policy that Pakistan adopted in 2022 for business and human rights. So that was
Now
used, and
2 minutes,
also the
please.
SEC. That was also the SECP's own ESG disclosure guidelines and PSX's own guidance on ESG disclosure as well. So they were used to rank the human rights and corporate responsibility. Next slide, please. So country by country, I think this section, because a lot of companies were not doing properly, the responses were that they might be reporting it in the country that those operations are based in. But ideally, this should be done as part of the whole company's own annual report as well. Next slide, please. Sector-wise, we saw that the chemical sector was the highest performing, and we saw paper manufacturing again second highest, and fertilizer at number 3. Then, of course, the rest of the sectors were below this, including other, energy and oil and gas as well. Next slide, please. We can move to the recommendations. I think it's after this one. Saad, can you move to the next slide? Next, please. Yes. So the recommendations focus again by section by section. We have gone through this, so the recommendations are also in detail, but anti-corruption has emphasized that the policy needs to be put in place, training needs to be done, and then particularly for all these transparency policy, anti-corruption, whistleblower, there needs to be an endorsement from those through websites or annual reports. And the disclosure some transparency on the subsidiaries. Someone's it has to be again also on the incorporated into the company's operations and can be disclosed through the annual report. The disclosure on financial reporting, we of course saw that financial reporting was being done, but the CSR should be clear and the breakdown of the projects it's being spent on should be clear as well. Next slide, please. Again, promotion policies for companies that did not meet the criteria, they should follow a merit-based policy, and again, gender inclusive for promotion policies. We saw that only 26 companies were doing it. So majority still needs to work on this. Procurement contracts, as I mentioned, that post-award disclosure, and again in the reports, even if subsidiaries are involved, they should be disclosed in case of procurement contracts. Next slide, please. Human rights and CSR, these are, we saw that there are new guidelines and guidance from both SECP and PSX. So those should be adopted by the, at least the leading companies, listed companies, and both for country by country reporting. The financial data should be included as well as country operations in the primary, at least the main company, if it's a holding company at their level, but also if the same slide. So that is, I think this is the conclusion more or less of the report's findings. The companies assessed are here, and as mentioned that 70 were individual samples, but ParkGen was dropped on their request. Otherwise, we've analyzed all the remaining 69. So I would conclude here and back to Kashif.
Thank you, Dawar, for that sharp and informative overview of the assessment. Now we move into our panel discussion. In this distinguished panel, we have aimed together relevant stakeholders to foster a meaningful discussion on improving corporate reporting mechanism in Pakistan. This session will be moderated by Mr. Kashif Ali. Joining him are distinguished panelist Mr. Majid Naim Sufi, Director General Central Monitoring Unit, Ministry of Finance and Revenue, Government of Pakistan, Dr. Fakhira Rizwan, Chief of Legal and Corporate Affairs, Pakistan Stock Exchange, Mr. Imran Khan, Director Technical Institute of Chartered Accounts, Pakistan, Ms. Khola Batul, Director Ministry of Human Rights, Mr. Mahmood Khwaja, Strategy and ESG Advisor and Board Director, former CEO, President, PICG, Henkel and Ali. Now I would request our moderator, Mr. Kashif, over to you to lead the panel.
Thank you, Raima, and thank you very much to Salman Amin Saab, Dawar Saab, and I think the discussion really sets the scene in terms of how we want to take this conversation in the panel. So we have a much reduced time for the panel discussion. I think for the next half an hour, we'll go into have a key interventions from our panelists. And the initial idea was to ask each one of you some questions, but I think what we will do to keep it more broad in terms of your opening remarks and your key interventions. So let me just move to our first speaker. And Mr. Memush Khwaja, if I can come to you. So as a former head of Pakistan Institute of Corporate Governance and currently the MD of ILMNet, you have been at the forefront of corporate governance for many years. And my question to you is, how do you see the overall corporate governance landscape in the country? How well is it integrated with the global best practices? And especially also if you can shed some light on how well is the ESG on the corporate boards and the businesses agenda?
Hello, good afternoon now, Kashif and Transparency International. Thank you very much for the invite. I hope I'm clearly audible and great. So let's start right away. So I think your first question regarding the corporate governance landscape of Pakistan and assessment of how well it is integrated internationally. I would say Pakistan's, you see, there are different ways of looking at the corporate governance situation here. You can look at the quality of the regulations that we have that support corporate governance. It's clearly well established that Pakistan was one of the pioneers in coming up with the code of corporate governance in Pakistan within the region. And over time, Pakistan has also enhanced the corporate governance regulations quite well in step with time and in line with modern day requirements. However, the main assessment in Pakistan's corporate governance landscape is that the structure of our companies or the marketplace is such that it is quite atypical. You see, it's basically the ownership structure in Pakistani companies, especially in listed companies, is very much owner driven. Some 90+% stock holding is basically owner driven, and as you can imagine, the corporate governance body, the structure is such that it has different layers of stakeholders, players involved in corporate governance. On one hand, you start off with the investor community, which is comprising of institutional investors and also retail investors. Typically, the investor community would appoint a board of a company who would look after the governance of the organization. And then the board would then typically, hire a CEO or management, and then the whole organization structure underneath who run the organization. So you have to have these three layers: the investors, the board, and the management, which should be ideally comprised of three very different independent bodies. However, the challenge or the uniqueness in Pakistan is that, by and large, the investor is the board, and also in many cases also the management. So you have pretty much concentration of power and all interest in single hands, and that's what is a challenge, is one of the biggest challenges in the Pakistan corporate structure. As I said, because then it's very difficult to segregate those duties and to identify responsibility of corporate governance within the structure. And as long as this participation of institutional investors or coming forward of retail investors is limited, it becomes a real challenge to truly, implement good corporate governance. We have the best of rules, as I said earlier, and I believe, by and large, the compliance against corporate governance is very good. You have if you look at if you did the check on corporate governance, then you would find it to be good to very good. But of course, that's what we don't just want to sit at in terms of compliance. We would also ideally want the true spirit of corporate governance to come out, and that is an area where time and again you hear criticism, you hear questions that this is not being always practiced very well. The powerful ownership and the board structure, which is pretty much concentrated around self-interest, um, limits the efficient operation of good corporate governance. And the regulators are constantly trying to pull this away. On one hand, of course, they are very much interested in attracting new investor base, the shareholder base. At the same time, while they grapple with the challenge of effective practices inside the company, they would like more transparency. They would like more control over the practices, but it is always difficult, because there's a fine balance one has to draw between control and let's say good practices to evolve by themselves, and that is where we or the regulators have been struggling. They would have liked more introspection, but the corporate owners, the boards, of course, will provide pushback on this. So I think as we move forward, the way forward is to try to encourage maximum participation of the market in company affairs. The regulators can provide as some transparency to the proceedings of companies to shareholders. They should give the maximum chances of participation in elections, in other matters. However, we need more and more people to come into the marketplace, and that will be the game going forward, how we can successfully provide that. So I think if you want me to continue discussing ESG in the same breath, I think once again, Pakistan has been, from a regulatory point of view, quite, I would say, quite forward thinking. Although, we heard from Dawar that Pakistan is behind, but still, I would say there are only 35 or 40 jurisdictions which have taken up the IFRS on sustainability as of now, and Pakistan has now already within a space of 18 months has come forward and now put the regulation up front there. So I think that's quite advanced, so once again we are there with the regulation. But the real challenge remains, where do the corporates stand, and how effectively these practices, the ESG practices, will be adopted and displayed by the corporate sector. So that's something that we still haven't really seen. I think the preparation is about to begin. To some extent it exists, but not necessarily as prescribed by our IFRS sustainability standards. So I think over the next 12 to 24 months, we do expect that corporate will start aligning themselves, but that would also mean they would start to comply in some form or the other. And once again, the true spirit of sustainability adoption would remain a question mark. And we are far from that, because the true challenge in ESG or sustainability is whether businesses see ESG as important for their businesses. They see the risks to their businesses, and they see the opportunities to the businesses associated with ESG practices. And I think that that journey is still to be taken up. How will that transpire? How will that transform? I think we will need more leadership from certain companies. That will always be the case. We will need some good case studies to come forward. We will need to prove the business case of ESG. We have spoken to hundreds of board directors on this topic, and I think it only comes naturally to businesses when there is economic sense for them in taking up sustainability agenda inside the organizations. So we will need more stronger business cases to demonstrate to them that this is actually working. Otherwise, it remains limited, and the large business sector in Pakistan, which is the SME and the family businesses, I think that's going to be still a few years down the road. However, I think if we can get the listed sector, the corporate listed sector, 400 plus companies that we have, if we can get them moving and over time demonstrate some good business cases around ESG, then we will at least reach the level of compliance, in 2 years. That's my expectation. Back to you, Kashif.
Thank you, Mohammed Saab. And I think what you said about the sustainability, ESG, and transparency, perhaps the challenge here is the adoption. And I think if we take your key takeaway is to encourage more and more participation of the markets. Now, moving to the Mr. Majid Naeem Saab, to you as a Director General of the SOEs and the Central Monitoring Unit at the Ministry of Finance. So I would like you to please have remarks on 3 points. First, again, how do you see this corporate reporting? And secondly, also the assessment that the TI has published, as many of the areas that we have assessed, they provide a very strong case for the voluntary compliance by the companies. And how relevant are these voluntary compliances in our local context? So I know that the CMU had earlier published a report where it highlighted the governance challenges of the SOEs. And I think given, again, the nature of the work that the SOEs do, perhaps one could argue that they need an additional layer of disclosures, such as in the case of procurement contracts information. So if you could also describe us the role of CMU and how it is contributing to strengthening the corporate governance of SOEs, including the disclosure practices. Over to you, Majid Saab.
Ji, Assalamu alaikum ji. My name is Majid Sufi. I'm the Director General of Central Monitoring Unit. Just to give you a background on the unit was established in 2023 as per the requirements of the SOE Act. The government wanted a dedicated unit to monitor the state-owned assets. The value of the state-owned assets, they are approximately 38 trillion, and we have about 212 companies. Now, as far as role of the Central Monitoring Unit is concerned, the Central Monitoring Unit is basically the eyes and ears of the government of Pakistan. If you look at the quality of our reports, and if you look at the context of transparency, I think we have made everything extremely transparent. We have a quality of we have a report on the quality of the business plans. We have a report on specifically on like the corporate governance side, a report on the risks, and the best thing is that this information is publicly available. So like the taxpayer can go on the site and it can just identify anything. If he wants to have a detail of like the subsidies being given or like the dividends being received. So the idea is to have a very transparent type of a unit that can effectively give out the maximum possible information of these state-owned assets to the general public. So I think the role of the Central Monitoring Unit is critical. Also because there is a lot of government support also. It's approximately about 2 trillion, in the forms of like these different things. So the public needs to know where are the funds going. So I think as far as the transparency is concerned, the SOE Act and then also, the monitoring, like the requirements. And if you see the, like the size of our report, so I think we have made everything extremely transparent. And, like these reports are also, they are being read by the IMF also. And they have also, like identified that, yes, like the reporting that has improved. Now, like one more thing I would like to identify, that if you, like, if you, like see the reports, like 2 years back, so, like that quality of report, that has, like increased a lot, because we have to make, like everything that has to be, like transparent to the public. Uh, so now you asked me about the corporate governance side. As far as the corporate governance is concerned, I think there is a lot of room for improvement. Like, for example, like the independence of the boards, the evaluation of the boards, and also like you can say the performance of the boards. So that is an area where the government also knows that board performance that has to improve, and that tone at the top, that also, like has to improve. So I think the unit is like it's just like an year and a half old, but like during this year, we have done a lot of things which have made these state-owned assets, like extremely, like transparent. So I think it is a success story. Also, at the same time, like there is a lot of, I can say a lot of, like room for improvement also. As far as the corporate governance is, like concerned. Like we have another topic of the ESG thing. On the ESG standards, we also have to see that the like the SECP, like that guidance is also, it's a little, like voluntary, so it's not a binding thing. So for that also, like we've recommended to have these guidelines. I mean, like, like there should be binding, especially we have a lot of these climate related, also these, like risks. So I mean, you can say that there is a lot of, like room for improvement, but I mean, like as far as the transparency thing is concerned, we have tried to make everything, like clear to the general public. Yeah.
Thank you, myself. Thank you, myself. Now coming to Ms. Khawla Batul, if I can come to you. So again, at the Ministry of Human Rights, you have been looking after the business action plan for the human rights. And it's a document where we also drew a lot of indicators for the track assessment. And the assessment on the indicators from the National Action Plan on Business and Human Rights, it shows that when it comes to compliance, the publicly disclosed information on grievance mechanisms, on human rights, on gender, non-discrimination is very limited. Could you talk to us about what exactly is the National Action Plan on Business and Human Rights, and what are the mandatory requirements on the companies when it comes to disclosure on human rights and the non-discrimination?
Thank you, Kashif. Am I audible? Okay. We have heard a lot about CSR throughout this session. So just to say that National Action Plan on Business and Human Rights is something which countries have been introducing over the years now under the UN Guiding Principles on Business and Human Rights. And these guiding principles, which were endorsed by UN Human Rights Council back in 2011, they were a step forward from CSR. So the idea was to move forward from a charity-based model to recognition of rights. Pakistan is the first South Asian country to introduce this National Action Plan back in 2020. And it was endorsed by the Federal Cabinet in 2021 and formally launched in December 2021. So it's a 5-year plan, and as you said that the mandatory requirements for companies are very limited in Pakistan, and under this National Action Plan, if we are thinking that there are mandatory requirements, there are none at the moment. Because again, if we refer to the UN Guiding Principles on Business and Human Rights, they're based on protect, respect, and remedy framework. So for state entities, there is more responsibility under the protect principle, and then for businesses, it is usually they are encouraged to respect the human rights principles, and then the remedy framework involves both the state and corporate sector to provide effective remedy. Because again, over the years, international legal framework has seen that the affected parties, for example, communities at large scale levels, they have been denied effective remedies. So coming back to this National Action Plan on Business and Human Rights, under this action plan, we have developed a human rights due diligence roadmap. So the idea was to engage all the stakeholders, private sector as well as government, and delineating responsibilities mainly of government functionaries with respect to human rights due diligence in future. So the roadmap stipulates for revision of public procurement regulatory authority rules to include human rights clauses in procurement contracts and agreements, encourage public sector organizations to preferentially select bidders with a strong human rights track record, and develop mechanisms for addressing human rights grievances in procurement projects. This roadmap further stipulates to amend existing requirement of environmental impact assessments to incorporate human rights due diligence with a specific focus on community impacts. It also calls for introducing human rights due diligence guidelines in public sector development project, framework, and policies. So this is something which we are asking all our stakeholders, the government stakeholders, both
basically kind of shut down the conversation as soon as Emma walked in. So I was thinking of just going to him and asking him where can to but I went okay.
Sorry, I think some microphone. G, please go.
Yeah, so so this framework we have been asking all our stakeholders, provincial as well as federal entities, for example, Public Procurement Authority, and so to introduce these measures as soon as possible, and these are stipulated within the action plan. Apart from that, for business entities, we have introduced detailed BHR guidelines based on international best practices, and these guidelines were introduced in 2023. And these include basic 9 voluntary actions which can be easily implemented by all businesses, either large scale or small scale, without any problem. And these includes respecting human rights vis-a-vis corporate responsibility, and businesses should conduct internal trainings to raise awareness of UNGPs among their staff, including senior management, enforcing a clear policy for the protection of human rights within business operations, conducting human rights due diligence as a corporate best practice within business operations and across the value chains, establishing effective redressal mechanisms to provide remedies, and developing self-assessment checklists, inclusion of viewpoints of local communities with respect to impact of projects, among others. And we have recently also drafted a human rights due diligence checklist, which has been shared with all the business entities for their views and comments. Currently, Pakistan does not have a mandatory human rights due diligence act, and we are envisioning that by taking all these measures in, stepwise, we are moving towards that direction where human rights due diligence becomes mandatory in future. So yes, that is how we are approaching it. And also that Securities and Exchange Commission has recently introduced a number of measures which will make reporting on these, reporting for the public as well as the other private sector mandatory on, for example, gender pay gap, and also for listed companies, they have introduced some other guidelines with respect to protection of women at workplace, introducing anti-harassment policies and all of that. So we are hoping that the reporting will get better in future. Yeah, that's all from my side. Thank you.
Thank you for this comprehensive overview, and also a very strong rationale on why this voluntary compliance could be enhanced and some of the ways through which the companies can do reporting on this, though it's voluntary still. So, Mr. Mohammad Imran Khan, if I can come to you. So, Mr. Mohammad Imran is currently the Director Technical at the ICAP. Now, one of the areas where there is a mandatory disclosure, which the companies in Pakistan are required, is on the domestic financial reporting. And we know that the companies have to report on their revenue, on their capital expenditure, tax income, corporate social responsibility. And the ICAP has a very key role when it comes to financial statements. And our TIA Pakistan's assessment also reveals that the companies are significantly transparent in their financial disclosure practices. But one of the recommendations that we have made is that the companies must improve their disclosures regarding the fully consolidated and the non-fully consolidated subsidiaries, as well as revealing their countries of incorporation. So keeping such information, again, I think the idea here is if such information is confidential, it can open up avenues for tax evasion, money laundering, or other illicit activities. Now, my question to you is, can you identify some of the gaps and the international best practices when it comes to financial reporting, the mandatory financial reporting that is required from the companies? Over to you, Imran.
Yeah, good afternoon. Thank you for giving me an opportunity to speak. And as regards financial reporting side of the corporate sector, I mean, the framework that we follow is laid down in Companies Act, and the companies, are required to follow, different frameworks. Mainly, if I talk about public interest companies or listed companies, they are required to follow IFRS accounting standards. So you would have seen the from the rating that you've done. I mean, the corporate sector is largely compliant, almost, 90 plus %, by the requirements. As regards, the requirements of, disclosure of the countries of incorporation and other things that you've talked about, I think these requirements are governed under the framework in terms of requirements stated in IS1 and the fourth schedule of the Companies Act. So the companies do follow the requirements and disclose unless, those subsidiaries are quite, let's say, below their materiality level. In that case, such information is not disclosed. So in terms of requirements of IFRS accounting standards, yes, the companies are disclosing the information which is required. And now I would like to take this opportunity to discuss, and to provide, to give my view on the overall report. And as I have understood, the transparency relates to disclosure of information. That relates, the areas which we have covered in your report are anti-corruption, diversity, inclusion, trust, and disclosure of code of conduct, and the policies related to public procurement. So I would say, the requirements which are mandatorily required by the listed companies, they do make disclosures, in accordance with those requirements. But the areas such as, let's say, anti-corruption policies and the let's say disclosure of policies relating to public procurement, and let's say, disclosure of their code of conduct. So there is a need to further strengthen the requirements. If you want those information to be disclosed in the annual reports or on their websites, because currently, the requirements which are mandatorily required to be disclosed by the companies, they do comply with that. So I think there is a need to have a discussion. There is a much greater role of the corporate regulator, SACP, to look at the areas which we have highlighted in your report. And I think there is a need for, if those recommendations which are there in their report, the other stakeholder is the corporate sector itself. The corporate sector, should also be, consulted as to whether those requirements which are there in your report, those recommendations in your report, can be followed by them, the corporate sector, and a consultative approach should be taken. Besides that, I think there is a need to have more capacity building sessions for the corporate sector. If those requirements relating to disclosure of, let's say, anti-corruption policies and the code of conduct and the public procurement, let's say, are brought into regulatory through are mandatorily required to be followed by the corporate sector. besides that, I mean, if those requirements are brought into into the through the regulatory reforms, then I think there is a need to put certain incentivization for the corporate sector. I mean, if they are required to follow those additional disclosures, if they are required to give certain additional disclosures, obviously there should be an incentive for them as well. For example, some of the measures can be that they can be transparency index on the PSX. I mean, where the companies with stronger transparency matrices can put their information. And there can be, there can be ways such as partnering with banking sector to offer preferential loan terms to companies with stronger transparency. So there are, I mean, certain measures which need to be taken to improve, transparency within the corporate sector. But as far as the current regulatory requirements are concerned, I feel, I mean, the corporate sector is largely compliant. And there is I mean, as regards ESG, the ESG guidelines, are currently not mandatory for the corporate sector, for the listed companies to follow. But over the time, as IFRS sustainability disclosure standards have been adopted, so I mean, the companies will be following them obviously over the time, and they will be complying with that as well. So that's all from my side.
Thank you, Imran Saab. I think you have rightly identified that a lot of recommendations that we have pushed for are on the voluntary side, and I think that's also the objective as part of this assessment. To encourage voluntary compliance on the company side, but then also push for certain reforms within our regulatory frameworks to incorporate these best practices. But then also, I think it's also somewhere a question of the awareness as well. So, for example, a lot of if we look into the isolated sections such as procurement, the SOEs have their own SOE Act, and under the SOE Act again, the procurement rules define that the overall PEPRA rules of the country take precedence. And these rules then require the disclosure of the bidding documents, they require disclosure of the contract award information. So somewhere, I mean, within the rule, within the local context also, some of these compliances are embedded. But then what you said is very important, that within I think from the regulatory side also, there is a need for reforms, which also I think from our end, we are trying to encourage on both sides, from the companies and also on the regulatory. I think Dr. Fakra has not been able to join us online. So maybe I think we'll open up the forum for any question and answer and the reflection. We have another 10 minutes or so. So anyone, if you would like to have any input, please introduce yourself, and yeah, we'll open up the mic. Jamshed sir.
I am Jamshed Iqbal. I am representing Intergroup Limited. My question is, Kasab, for you, that you have mentioned that a lot of compliances and parameters which CI is evaluating companies on is voluntarily compliances. Is it unfair to the corporate organizations that they are not aware? You are evaluating on a criteria which they are not aware of. Formally, they are required to follow IFRS and Companies Act, but there are country by country reporting standard which is not formally communicated to the organization to be followed on. So it feels a little unfair to us that we are being evaluated on a criteria which a gauge which we were not aware of.
So Jamshed sir, so as part of this assessment, so if you look at the 7 sections, major sections have been drawn from the mandatory compliances. But as the business action plan, so a lot of so the anti-corruption is part of the voluntary compliance on the within the business action plan. So we have I would say a mixture of both, where the mandatory compliances are there. But then what we are trying to, I think, do from this assessment is to create a value addition that, if there is a one step further voluntary compliance from the companies on these, certain indicators which are there in the local regulations, but in some areas are not mandatory, it could create a incentive for the companies themselves. So it's not necessarily looking at just, a checklist, whether a certain compliance is there or not. But the idea here, I think, is more broader, that how do we create a sort of incentives for the companies that these are also an important area from business integrity side that needs to be reported. And most of them are, as you saw from the presentation on the key findings as well, they draw from the local regulations. They draw from the SSCB Code of Conduct, from the action plan, from the ESG guidelines. But obviously from within those local regulations, some are there which are the voluntary and not mandatory, as Imran Khan Sab also identified. So I think the objective here is more of creating an awareness that this is there. And if compliance can be improved, this is sort of can provide a value addition for the companies themselves.
Fair enough. We do recognize that it will ultimately help the organization to improve its process and be more transparent. But still, it is a feeling from assessees end where that we are, as per regulator, we are required to follow IFRS's Companies Act, but certain areas are not required by regulator. So for additional requirements, we need to be aware to comply those. The awareness was very important. Maybe for next sessions, we will be more aware and we will be following those additional requirements, which are not mandatory, but optional.
Yeah. I think this is also on our part as the objective is to contribute to this awareness. But then also, I think, so as part of this assessment, we did a very, comprehensive engagement with the companies. And there were, the policies which were not publicly available. So certain companies, showed a willingness that these are, the documents are there. And that's, I think, also what we have sort of very explicitly identified in the report itself, that this is not an assessment of, the implementation or the mandatory compliances as a whole, but sort of what should be publicly reported. And there, a lot of the key areas that have been identified. And from the recommendation point of view, if you look at it, a lot of these recommendations are for the regulatory bodies as well. But the idea here is to bring to this awareness and attention that these best practices are there in the local regulations, and how can the reporting can be enhanced on these sections. I hope that that answers your question.
Yeah, sure. Thank you.
Next, I think we have Salman Essensab.
Hello, Assalamu alaikum. Kashif Saab, am I audible?
Yes.
Yes. So, Kashif Saab, this is Salman Hassan. I'll be representing Indus Motor Company Limited. So, first of all, a great acknowledgement to Transparency International for this awareness session. Look forward to meeting in person, but considering the current situation and the dynamics, I think it was more appropriate to be having a virtual session. So it's a good, platform and opportunity to raise awareness about the disclosures and raise awareness about, what can be done to be more transparent so that, foreign investors and further investors can be encouraged to invest in companies in Pakistan. But on the other hand, I would like to agree with the point which was, put forward by Mr. Imran Khan regarding the fact that companies already in Pakistan are quite compliant. They are doing a lot of disclosures as well. And to enhance further disclosures, there need to be some incentives for the companies, because adding any further disclosures to the cost of companies to be more compliant, to be more transparent about putting forward their things. So I think it's a good point that was raised by Mr. Imran that we need to give some incentives to the companies that should be part of some regulation for this enhanced disclosure. Thank you.
Yes, no, I think I've completely agreed. And I think the idea of, I think what was also highlighted in the panel and earlier in the opening remarks as well, the idea is to create those incentives. And what we have also done in this assessment to make sure that, the assessment is focused on the mandatory. So if you look at the overall assessment focuses on 7 sections, but the overall, assessment where the ranking and scoring is done is only on the 5 sections. Because the procurement does not necessarily apply on all the companies and the country by country reporting. So I think what you said is the key point here as to how do we create those incentives and sort of encourage the companies that there is a sort of value addition in the public reporting, because the policies are, it's not necessarily the question that the policies are not there. So the policies are there in a lot of cases, and that's why we saw that there is the highest compliance level when it comes to domestic financial reporting and other key areas. And on others such as ESG, such as non-discrimination. So perhaps the policies could be there, but they're not in the public domain. So what we are trying to encourage through this assessment is to more and more realization that these documents and needs to be publicly available. And one of the tools that we are using is the integrity pact with the companies, that when the companies have these integrity pacts, these are again models that are used by DTI and a lot of other chapters, is sort of showing that the company sort of have a highest level commitment on anti-corruption and the public disclosure of information. So I think I completely agree with what you said. Yeah. But we'll also open this for the panel if any panelist has any interventions, please. So we don't see any, if there are any more input or questions, please feel free. And in case there are none, then perhaps I think we'll move towards the closing of the panel. And I'll request our Board of Trustee, Ms. Shahana Kokab, to please give vote of thanks for the participants and for the companies that engage in this assessment. Madam Shahana, over to you.
Assalamu alaikum. Okay, can you hear me? Hello?
जी आपकी आवाज आ रही है, little slow.
Yeah. I very thankful all the participants who joined today in different circumstances, and we hope that we will meet again. We will follow up what that has been made. And my sincere thanks the team is compiled, and it is going to serve as a base for future actions. So thank you all, and we'll get back to you later and see the year. Thank you.
Thank you, Ms. Shahana. We have one more hand raised. Osman sir.
Assalamu alaikum. Am I audible?
Ji.
So I was here to present the OICCI's view on the report. I think just a couple of things that I'd like to say, if that's okay.
Yes, please, Osman. Over to you.
So yeah. Sorry. Just one thing I wanted to point out. I was listening to the discussion throughout. First of all, kudos for the report and trying to organize it the way you have been able to, given the situation yesterday, which transpired last night, actually. But I think something that I'd like to leave with, I think more as a question than statement, is the intent why these disclosures are required. Well, why these disclosures are required would lead us to the question as to the intent why they should be there. If we take them as a legal burden, they're going to be a checklist that we will try to, either take, okay, we need to do this, we need to get it done. I'm sure most of the people here have a long enough memory to remember that when Enron happened in 2020, year 2000 and 2001, and it led to the Sarbanes-Oxley Act, which led to a lot of financial reporting. Even in the last decades, things such as the Volkswagen Dieselgate scandal and so on and so forth, different disclosures being required. I think something that one should see is if we look at the ratings, I think the financial disclosures and the organizational disclosures, if you take an average out of that, that's high, like 94%, 90% overall. But when we look at anti-corruption or when we look at human rights, that goes down. And we need to ask ourselves why. Is it because not a moment we won't do it? And when we correlate that with if there are human rights violations in the corporate sector and what sort of violations exist, do people need to do it only because it's a legal requirement or because it's an ethical requirement? It is something that we must do. So I think I just wanted to, and obviously all of this is based on one thing everyone needs to keep in mind, I think, is the ecosystem we work in. In Pakistan, I think last week only we had that the tax reform amendment ordinance, which allows for before legal remedies are completely exhausted, money can be immediately and suddenly recovered, which are owed to the state. So that takes away a certain level of right from corporate entities, and then the trust factor, the ground on which the ecosystem is supposed to build is very shaky there. For the state, there has to be a requirement to have sustainable, very clear goalposts so that people can say, okay, this is what we should do. This is the ethically right thing to do. And if we do this, we won't be penalized. We need to recognize where we stand. And I think that's something that the OICCI as an organization tries to voice all the time. Secondly, I think for the entities, I would suggest maybe look at whether we are doing this as a legal burden and would require something in return for it to be done, or is it an ethically right thing to do? Whatever profits we earn them the right way, the ethically right way. So that's just a couple of things I wanted to leave with the audience.
Thank you very much, Usman Saab. Thank you for those very pertinent points raised by you. And I think that's also sort of highlights the importance of the question of why that also came up a number of times in the discussion. And I think also perhaps we could look into why, certain companies have scored so well on certain indicators where overall the average is low. So perhaps the incentive is there, and perhaps certain companies see the incentive of reporting on those indicators. So maybe it's what was earlier said is the also it needs more awareness and more discussion on this. But thank you very much. I think it has been very insightful for us as well. And we look forward to sort of documenting the key takeaways from the conversation today, and also have similar engagement in coming months. And I'm also grateful for all the panelists for your time, for joining us today, and also all the representatives from the companies for taking all the time to join us today. And we hope that you found the discussion worthwhile, and we look forward also to engage and staying in touch with you. Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you, sir.